moving on to Nigeria, of course, yesterday we saw the market fall back a little bit. It's also in the trading range in Nigeria. We saw the NSE All Share Index closing at 33,429 points, largely because of the losses we saw in several cement companies. We'll be getting to that in a little bit as we now are joined in the studio by Kayode Akindele. He's a partner with 46 Parallel. And on the line, we do have Abiola Rasaq, team lead research at UBA Capital, to give us some perspective. Gentlemen, thank you so much for joining us for this discussion. I want to start with the broader market, and I'll start with you, Kayode. Your thoughts on the, like I did mention, it seems we're now stuck in the trading range for the market. It seems that it's really all about the results, what we see from the banks, that will get this market going again.
Yeah, I think mostly the market is waiting for the bank results to come out. EcoBank first came out yesterday, which pretty good results. And I think they're waiting for the rest of the big Nigerian banks to come out, and that will lead where the market is going to go. Right.
Biola, I want to get your thoughts on CCNN's numbers. Very negative. At least that's the broad perspective of analysts. We saw profits down about 48%, while revenues were up just about 8%. What did you make of those numbers, and what can we take away for the broader cement sector in Nigeria?
Thank you very much, Wole. I think the major takeaway from the CCNN numbers is the fact that scale is becoming more important in the cement industry. Remember very well, CCNN has the lowest installed production capacity of just around 500,000 metric tons. On the back of that, you notice that they've actually been facing some challenges with respect to pushing out their products to the market. The major advantage they've always had before now is the locational advantage, wherein they're located in the far northwest part of the country, where you typically find the likes of Dangote Cement, for instance, more exposed to the middle end of the markets. And, of course, being a bulky material, it's difficult to actually penetrate that market. In recent time, Dangote Cement and likewise Lafarge Watco, using the Ashaka Cement, which is located in Gombe, has been trying to penetrate that market. And on the back of that, we're beginning to see challenges for CCNN. And the major challenges, again, is the energy cost. Remember very well, the cement factory relies largely on LPFO. That's the sole energy source for CCNN. Right. And of course, LPFO is the most expensive energy that a cement company can use. On our own estimate, it's actually about 20% more expensive than using gas. Coal is a little more expensive, even though one would say that it's not environmentally friendly. But of course, LPFO, given the fact that it's the most expensive, and that's why you're seeing that impact in their cost of sales sitting around 72% of revenues. So largely for us, not until CCNN addresses that challenge of using LPFO as a major energy source, I think they're still going to face that challenge. And like I did mention earlier, they need to be able to ramp up their capacity, installed capacity, to have that benefit of scale. For instance, the operating expenses of a CCNN is around 22% of revenues, as against what you find for the likes of Ashaka, just around 15%. All right. And of course, the bigger players around 12%, the likes of Dangote Cement.
Okay, Biola, if I can get Kayode into the conversation. Kayode, I think a few months ago there was some concern about a glut of supply from importers in the cement sector. Cement sector is clearly one of those sectors that you have to invest in this market, especially if you're looking outside the banks. Your outlook for that sector right now, are you worried? Because we're starting the earnings season for this sector on a pretty bad note at this point.
Yeah, I mean, Abiola has talked about CCNN. I mean, the results, I don't think were as bad as the market is making out to be. I mean, the revenues did go up. I think they're having issues, as I said, because of they're in the north, the issues in security issues in the north, and getting that distribution out, and the cost of sales from the energy costs. But I think you look at the broader market, there was that spat in last year over a glut in the market. Benue Cement said they were shutting down for a period of time, and it seems to be ongoing. There were some adverts yesterday about Ibeto Cement and bulk cement. And I think until we address those kind of issues in a sense of the broader cement market and look at the energy issues, because a lot of the cement manufacturers, especially Dangote Cement, are trying to move towards gas. But is there enough gas to go around to the cement companies as well as the other power companies coming on stream? But
are you still constructive about cement space? It seems like I mentioned, it's somewhere you have to go if you're looking outside the banks.
Yeah, I mean, to be honest, the cement sector should grow. I mean, Nigeria has an infrastructure deficit. You have the Sovereign Wealth Fund coming on stream from this month, apparently, and they're going to concentrate a lot on the infrastructure sector. There are a lot of infrastructure projects, especially in the power sector, are going to go forward. So cement should be a good earner and should grow.
Biola, let's shift gear and talk macroeconomic policy. Of course, Central Bank Governor Lamido Sanusi in the news recently talking about the stability we've seen in the macro story. Of course, the MPC deciding not to bring down rates, disappointing quite a few people, a lot of people hoping that they will begin to ease on monetary policy, but of course that didn't happen. Your thoughts on the macro story right now, and how confident are you going into the second quarter?
Thank you, Wole. I'm quite optimistic on the macro environment, largely because if you look at the key indicators, say for instance, let's start from inflation. Inflation has hit to a single digit of around 9% in January. And of course, even though one would say the February numbers were sitting at 9.5, but of course that's expected because the January 9.0% was actually on the back of the base effect. But I think one important thing we must take note here is that core inflation, which is more of what the CBN will look at for monetary anchoring, I think that's been trending downward over the last 3-4 months, and that's quite impressive. Beyond the inflation rate environment, you also want to look at the Naira, which is the exchange rate environment now.
There's been some pressure on that, though, recently. I don't know if you're still confident that we'll see a stable Naira going forward.
I think the pressure on the Naira has been moderate, and of course that's expected because we are currently in the dividend repatriation period. Remember very well, a good number of companies who have released their numbers definitely would want to repatriate profit back to their home countries, particularly the multinationals, the likes of MTN, Airtel, for instance. Once they make money this year, definitely, last year rather, they will definitely want to take profit back in form of dividend. So what you expect definitely is that little pressure on the Naira. But I must say that I think what we've seen this year is actually not bad. Especially when you look at it from the perspective of the pressure that the Naira actually saw in 2011. I think Naira has been relatively stable this year. Up until now, Naira has only lost about 2% this year, which I think is quite impressive. When you look at it relative to the likes of Rand, for instance, that have been under pressure, I think it has lost almost about 9-10% this year.
Abiola, we need to wrap in a little bit. I need to get Kayode into the conversation here. GDP, of course, is the key thing, and that's why everyone is asking or clamoring, if you like, for the Monetary Policy Committee to ease a little bit. How constructive are you in that respect going into the second quarter?
I'm less optimistic about the economy than Abiola is, to be honest with you. I mean, inflation is more impressive. Inflation move is impressive, but if you look at other things, we have GDP going down. It's been declining since. It's now looking at 6% from 6.5% from the over 7% last year. You're looking at oil production being affected by oil thefts.
Of course.
Oil production has contracted. That's the biggest effect on GDP factors. And we're approaching election season. As we move to the end of this year, there's going to be inflationary pressure from election season beginning to start. And that's why the MPC is remaining quite stringent on keeping that tight monetary policy. So I think we have to address key factors in the economy, structural factors. And to those that are addressed, I think there are headwinds. And if you look at some of the demand for the Naira, the demand for Naira, there's been an increase in imports of fuel. And that increase in imports of fuel is adding to extra pressure on the Naira. And so I think CBN at the moment can control it, but as long as it doesn't go up even more.